Moneyweb's Hilton Tarrant has got the business headlines.
Well, Alec, retail sales fall for a fifth month, backing the case for an early rate cut. Naspers expects a 10% drop in headline earnings per share, sending its shares tumbling. Data sales up 20%, but it describes the market as fragile, and Spar boosts earnings by 30% on new store openings. The oil share closed down 2.25 today at 19,670. Gold currently at $723 a fine ounce. A barrel of Brent at 53. The rand currently 10.47 to the dollar, 15.88 to the pound, and the euro at 13.10.
Well, David, if you ever wanted to know we're in a bear market, we're in a bear market. Any news is bad news at the moment. Not such bad figures coming out from Avusa that the headline earnings are going to be up between 5 and 10% in the that's for the 6 months to September. Share price down. Naspers, as we just heard, share price down. Yanni Mouton starts buying shares in Seinhoff, share price down. So you can't do anything to push
you're
up
not
the
going to
prices.
win.
Eh?
I thought the results that came out of Mr. Price under the circumstances were good. Spars.
Hey, but Mr. Price is expensive, Dave. There's no margin of safety there.
It's
Very
look,
little
it's a
margin of
cash
safety.
retailer. I think that at these levels it's reasonable relative to the others. But I mean, it was a good result, regardless.
Well, we're going to talk.
Yeah, but I'm saying
to Stuart
Spar
Cohen
was a very good result. MetLife came out with a reasonable result.
But those are trading updates.
Sure,
on Spar,
but,
Spar and MetLife. But certainly,
no, I'm
Mr.
just
Price,
reinforcing
we'll
what
talk
you're
later.
saying. I say
Yeah,
all
and
of these
prices
things
are
come
down.
out and nothing responds to it. So the fundamentals are just being ignored.
This is a bear market.
Well, it is a bear market.
And what happens
it's a
in bear
horrible
markets,
market as
David?
well.
What happens in bear markets?
People sell shares.
And that means share prices?
Share prices go down.
They fall. And in the US today, when we were lucky, because at the time that the Johannesburg Stock Exchange closed, Hank Paulson had only just started speaking in America. And the more he spoke, this is their Treasury Secretary, it's their Trevor Manuel, the more he spoke, the lower the American share prices went.
Well, it's the same with Mervyn King, the governor of the Bank of England. The same thing happened there. You know, when he was speaking as well, worries about increasing unemployment, and he would lower interest rates if he needed to. So that puts the fear of God into everybody. People get very, very nervous about what corporate profits are going to go. They're very nervous about their jobs. So you find that, Alec, you know what's happening? It's like when you get a disease, a dreaded disease, you know, the doctor, you say, well, I'll fight this, don't worry, I'll fight it. And I think it's almost as though the disease is now starting to take grip on the body, and people who started to fight it are now coming to recognize that this is a lot more severe than initially thought. So, the world economy is under severe pressure, and we're seeing it in as you say, in demand for resources, and also in worries about unemployment, worries about corporate profits.
JC overall down 2% today. Demand for resources wasn't there. That was down by 4%. Anglo-American, a 7% drop. These are big declines, and the volatility, the fear index, almost 50% once more.
Yeah, it's very worrying. We've got to find a level at which share prices become attractive. I don't think we're far off, but we've got a lot of bad news to get through before comfort comes into the market and people start buying again. I think, Alec, if you look at this market, and this is where the opportunities are, you can find debt instruments. For example, you can find Eskom stock in in Europe, or you can find Standard Bank debt in Europe or in the UK, which are giving you 10, 12, 14% yields. That's where you're going to make the money.
But you've got to do your homework, David.
Yes.
Again, I'm looking at dimension data on the one side and Mr. Price on the other.
Right.
When you take the margin of safety, in other words, what is the yield? How much is your money making for you from those two companies? In dimension data, your money is making 16% for you on a earnings yield. At Mr. Price, your money is making 10% for you.
Right.
Now, you don't go and buy Mr. Price shares in this market if it's only making 10%, because that's that's a very small margin over the risk-free rate in the economy. Whereas dimension data, their earnings can still halve from this level, which they won't, and you're still actually comfortably in line with the risk-free rate. So you've got to do your homework.
You've got to do your homework. Where do you look for? You look for high dividend yielders. In other words, companies that can still pay good dividends, and also at you're talking about high earnings yields, which translates into very low PEs.
And if you look into the future, is that company going to grow its profits, or is it going to come under pressure?
Yeah.
We're going to be talking to Jeremy Ord from Dimension Data in just a moment.
But that's a good sign. If Jeremy Ord's back on the radio, it means good results are good.